a lot of times these insurance companies, you'll call, say, hey, can I get a quote? Hey, spit out a quote. They don't even look at the home.
Right.
And hey, yeah, here's your quote, right?
How much is the house?
Well, no, not even that. But so they get the quote, right? And then they follow up 2 weeks later. Hey, we got approval on this. We're going to move forward, blah, blah, blah. Okay, great. Then they put the address in to start quoting it to get it into an application. Status means a little bit more. There's a little bit more scrutiny once it gets into the application stage. And then they get a reject.
So if a buyer talks to an insurance company, let's say they don't know, without giving an address, they're really not getting
No.
much.
You can give the address.
Okay.
Say, hey, this is the house we're looking at.
Okay.
But they don't
run it.
Right.
I see. Okay.
They just put in their computer, they put in the address and
get
the quote.
But they don't analyze it.
Right.
Ooh, good tip.
Yeah.
That's a pro tip right there.
So what happens is, let's say you're an exclusive insurance agent. You only represent one company, because we have this happen all the time. Hey, we're buying this house. I went to my agent, got through the process, went to finalize things, and ineligible.
Wow.
Now you have to start that process all over again.
Welcome to the podcast dedicated to real estate, insurance, and building your business. Join us as we take you along our own business building journeys with additional wisdom from our network of local and national experts. Welcome to Bricks and Risk.
This episode is brought to you by Property Management Redefined. PMR is not just managing properties, they're creating partnerships that build long-term success for property owners. John and his team can be reached at manage@gopmr.com or by phone 267-753-6005. Tim.
Yes, Sean.
Who's a good client for PMR?
Property Management Redefined is looking for property owners who value three things: accountability, reliability, and a results-driven approach. They want to maximize returns, but still provide client and tenant satisfaction.
There's a lot of property managers out there.
Yes, there are.
What does PMR do really well?
Biggest thing is they're seamless and they're worry-free. So with that approach in mind, it allows the property owner to put their trust in PMR and know that the results will be there. The other thing I think a property owner is really going to value, because they do it so well, is that they have a local expert team, boots on the ground, managing your properties and your tenants' expectations every day so that you feel good about your investments.
We have millions of listeners out there.
Tens of millions.
If they want more information, how do they find PMR?
Right here, guys. Reach out to John Sachs and his team at Property Management Redefined. We'll take good care of you. Hey, everyone. Welcome to another episode of Bricks and Risk. I'm Tim G.
And I'm Sean Mooney.
Hi, Sean.
Have you been drinking?
Actually, I haven't, but I will be having a couple of drinks tonight because I'm going to the Young Junk Family Happy Hour.
We need that Young Junk.
So our pals over at Young Junk are nice enough to throw a happy hour for their podcast creators. Unfortunately, you won't be there drinking statesides, but I will be there drinking wine. Okay?
You will be laughed at, probably laughed at out of the room, but
totally fine.
Enjoy yourself.
It'll taste good either way.
Downtown Manayunk, Pennsylvania.
And I'll still do the job. All right, cool. What are we talking about today?
Diving in the topic of insurance and insurability and some of the problems that are going on right now about trying to get insurance, obtaining it, and then the premiums associated with it.
But we also want to talk about, too, this kind of links up both of what we're doing, which I think is what classified this one for the nothing divided by nothing equals nothing. Is that we're going to play a clip. Dill's going to help us out with this. Yeah. That in California, because they've experienced a lot of natural disasters out there. And again, our condolences and heartfelt thoughts to everyone out in California who's had to deal with loss. The Association of Realtors out in California now has an insurance contingency, which we do have in Pennsylvania, and we'll get into.
Yeah.
So that when buyers are purchasing homes out there, they can learn about the insurance before pulling the actual trigger and buying the house and going in closing.
Yeah.
So we'll get into some of that, but you're going to be leading the charge on,
as I say,
insurance.
Nobody would have known how sexy a topic insurance has become.
It's true.
In the last year or two.
Quite sexy. So we'll get into it. Dill, why don't we do this? Why don't you roll the clip that we have? We'll watch it for a little bit, and then we can start to dive into the topic.
Yeah, we'll bring it in.
Getting insurance used to be a bump in the road, but with the ongoing California insurance crisis, some areas are feeling it harder than most.
Usually was almost an afterthought in our transactions, and now I'm advising my clients on day one, start trying to shop for insurance.
Aaron Stump, a Sacramento realtor for Caldwell Banker Realty, has seen the change over her 19-year experience.
The landscape for insurance in California has changed quite a bit.
And that is why the California Association of Realtors purchase agreement now has a specific contingency for insurance, allowing the buyer to cancel the contract if they're not satisfied with the insurance
you would think
options
that they would have had
and cost available to them. Real estate officials report difficulties in getting their client an insurance policy. Stump says in Sacramento that really hasn't been an issue, but when you start getting outside of it, it's a different story.
Anywhere that's a moderate, high fire hazard area, those are the areas where we start to see difficulty in obtaining policies. But it's even becoming a little bit of a problem in our suburban and urban areas too. If a property is older, if a property has aging plumbing or electrical, or maybe an older roof, or trees that encroach on the structure, those things can all be problematic when trying to get an insurance policy.
Yeah.
ABC 10 has been reporting on California's.
Awesome. All right.
Yeah, let's go.
Here's one thing, because you and I were talking about this before we started this episode. Tell me what you know about California with people just trying to get insurance in general. It was what you were speaking about. I was like blown away.
Yeah. So, eligibility wise, right? So like who qualifies for a standard homeowners policy in California?
Mm-hmm.
And what's happening is it's just shrinking, right? The years ago, just anybody could call up any carrier, get a policy, no problem. Now, because of the wildfires, they're having to contend with earthquakes on top of that. They're really becoming a lot more selective about who they'll write.
Just in general, like people that own real estate in California.
Yeah.
Because they're prone to these things.
Yep. And so where maybe it wasn't a problem before is like these wildfires have really changed the way that these insurance companies are willing to write properties in certain geographical areas. So it's becoming a lot more difficult for them to get the coverage.
All right. So let's do an example. So let's say I'm moving to California.
Yep.
Which I'm not, but let's say I am. And I buy a home out there and I start, doing some due diligence on getting a homeowner's policy, which is what everyone needs, especially if you have a mortgage, you need homeowner's insurance.
No. You don't need it if you have a mortgage. You're required to have it if you have a mortgage.
Right. But if you pay for a home in cash, technically no one's going to force it down your throat. So I'm going to do some due diligence on insurance. Let's say I call a couple carriers and they all say, we can't insure you.
Yep.
What happens after that? What happens in California?
Yeah. So there's probably your first market is your standard market, right? That's your big insurance companies, national brands and all that. And then your second marketplace would be what we call like excess and surplus, right?
Okay. Is this what Stuart kind of...
Yeah, I mean, he's on the commercial end, but just talking about going out, the marketplace outside of your standard marketplace.
Shout out to Stuart Shepard. Check him out.
And around here, it's not that common, but anywhere coastal, it's very common. Up and down the border, eastern seaboard, Florida, Louisiana, Texas, along the coast, very common to get homeowners insurance through an E&S provider.
Okay.
So like your Lloyd's of London and some other carriers like that. So that would be the second place to go. If you strike out with the standard market and the E&S market,
Okay.
really you have no other option to get coverage.
There's no other place that would insure you. Those are the private markets, let's call it.
Those are the two options available.
Yep.
If you strike out with both of them, it's going to probably look like you're going to the state plan.
All right, so explain that. So I go to buy this house. I talk to the first line of insurance companies. They say no. I talk to the E&S. They say no.
Yep.
When I take that third step, what is actually happening between me and the state? What are they doing for me?
Yeah, so they're administering the policy for you. So
Wow.
it's like basically a pool of policyholders, just kind of like an insurance company,
Yeah.
but administered through the state. And it's a fair plan. And we have a fair plan in Pennsylvania. And it's like the policy.
FAIR?
FAIR. Yep. We can link.
Do you know what
that
that stands for? Am I going to quiz you here?
Ooh, I don't know. I don't know if it stands for anything at all.
Okay.
More so just fair access to
Gotcha.
to getting coverage, I think. But yeah, and so if you end up there, it's going to be a very stripped down policy, right? So you have your standard homeowners policy with, all your bells, all your whistles, your E&S policy that not going to get quite as much, and there's going to be some tweaks on some policy coverages, some exclusions, and some deductible differences.
Mm-hmm.
And then really at the end, you're left with this fair plan that's going to be
Like bare bones.
basic. Yeah, like a fire policy.
So technically, like if I get it through the state, it goes to that third level. Am I like making an insurance payment to the state to cover my house?
You'd be
Or do
making it
they-
directly to the fair plan.
Wow.
Yeah.
Interesting.
Yeah.
So
Yep.
so we wanted to talk about this topic because we did an episode not too long ago about the Zillow climate risk score
Yeah.
with First Street. I forget the name
First
of
Street.
First
Yeah.
Street. And we also wanted to bring that up because this is really where like the insurance and the real estate are like coming together. Like it's affecting both industries. Like people buying more homes are putting more strain on these insurance companies that don't want to insure them for whatever reason. And then again, it's like the insurance company is already strained. And then they got all these people saying, well, we need insurance and we need insurance. And they're like, well, we don't want to do that. So then what happens? Then the states have to get involved and they're like, we really don't want to do this. We don't want to be in the insurance industry. But again, like the state wants people to buy homes in their state. They want people to be insured in their state. So they have to have something as like that last line of defense to say, okay, you've tried all the normal options. You can't get it. We'll take care of you because we're the state of California or the state of Pennsylvania,
Right.
whatever it might be.
Yep.
Are there any other factors that you can think of, and there may not be, aside from natural disasters, as to why this also might be happening in California? Is there anything in how they do business that's different
Yeah.
from an insurance standpoint?
So I remember reading recently about how it's kind of a political issue, in that these insurance companies are trying to make money and get profitable in the state, and so they have to find ways to make money because the model that they're operating off of right now
Doesn't work.
isn't working. They're losing money, which then is like, well, if we're not making money here,
We're out.
might as well leave, right? And so some of the carriers have petitioned the state to say, we need to take rate, right? And that's always a struggle to say, we need a 22% rate increase to get profitable, right?
Right.
And then the state says, okay, give me your numbers, give me your books. Let me evaluate to see if that's valid or not. And they can come back and say,
It is political. And again, we don't talk about politics at all on this show, but just try and think about it like an insurance company going to whoever they need to talk to in the state and saying, I need to charge your constituents more money for me to be in business with your state. And they're like, I don't want my constituents to pay more money for lots of different political reasons.
Yeah, and it is political in the sense that all these decisions are made by the state insurance department.
Yep.
Which is usually a political appointment, I believe. I don't know how it's done.
Probably just like in real estate.
Yep.
Same deal.
And so not only do you have to get the approval for the rate through the state, but you also have to get like different changes, terms and conditions, exclusions, and all of that pushed through and get the approval of the state. So one of the things that they went to recently with some of these carriers were, hey, we have our deductible on our home. We may have a separate wind deductible on our home. We have an earthquake, mudslide deductible on our home, or a separate policy altogether, like earthquake. We want to institute a brush fire deductible, meaning if there's a massive storm, we're going to have to pay out a lot more money due to claims. We want the homeowner to shoulder some additional burden in those instances.
Interesting.
And that's where there was a lot of pushback to say, we're not doing that. We're not going to allow you to do that to our residents,
to the constituents of the state.
Yeah.
Yeah. So that's really where the politics kind of play into it.
And so as the carriers are trying to wrestle with this and try to come up with ways where they can, like a path to profitability, every time it seems like, specific to the state of California, that there's speed bump after speed bump after speed bump with the powers that be.
Hey everyone, this is Tim, your favorite Bricks and Risk co-host, but don't tell Sean. I hope you're enjoying this episode, and I'll get right back to it in a moment. Our audience grows through word of mouth, so if you would please take a moment of your time and give us a review on the platform you're on, that would be fantastic. Please also help spread the BNR word by sharing your favorite episode with a friend. We greatly appreciate your time and trust. Now, back to the show. One thing I also thought that was really interesting about that particular clip that we just watched, which really is what inspired this episode, was they were talking about it from a real estate standpoint. So when you buy residential real estate, especially in the state of Pennsylvania, but I know most states operate this way, there are terms of the contract, meaning, okay, I'm going to pay X for the house. We're going to have closing on this date. Here is the due diligence inspections, whatever it is, your mortgage, your appraisal. There's lots of different due diligence inspections in a real estate contract that say, I want to learn these things before I buy the house. If when I learn these things, I don't like it and we can't come to some kind of agreement on new terms, then I have the right to terminate, get my deposit back, and move on to another house. So what was interesting in that clip is the real estate agent was saying, well, now California has an inspection due diligence clause for insurance, so that if the buyer doesn't like the terms of the insurance, I can't go first level, I can't go second level, I don't like my coverage at the state level, let's say, I don't want to buy this thing, that they can cancel the contract.
Yeah.
And what I find most interesting about that is because we shoot out of Philadelphia, Pennsylvania. So I'm licensed in Pennsylvania and New Jersey, but in Pennsylvania, let's stick with that. There is a property and flood insurance due diligence option in our contract. I believe it's been there for as long as I've been in.
Yeah.
I can't remember when it hit. Where most of the time, high majority of time, I'm checking off that option for my buyer clients. I'm advising them, hey, if you're going to do a home inspection, termite, and radon, I think we should also check insurance, whether they're in a flood zone or not.
Yeah.
Like you said, everything's technically in a flood zone, depending.
Well, and the mapping changes.
Yeah, exactly.
So the prior owner could have a house and they've never had flood. They've never been required to have flood.
You're just taking their word for it.
And then next year, the mapping changes and whoever the bank is runs their mapping and they find it. And now it's a requirement. It actually happened literally. The office next to my office on Butler.
Okay.
Out of the blue, said to the owner, who I know, you need flood coverage. And he's like, what are you talking about?
Really?
Yeah. and you and the way when he said it, I was like, I knew behind us there was that little I guess it's Tannery Run.
Yeah,
Is that
Tannery Run.
that
Yep.
like creek that runs behind us?
That what?
The creek that runs behind us. Shout out to Crickwater Saloon
in Philly. Probably one of the best names for a bar I've ever heard. Crickwater.
But do you wear the creek shoes to the creek run? So literally I pulled up the map, and sure enough, on the newest mapping, it like hits the property next. It juts out, and they're like, "You need to have it."
Oh wow.
Yeah.
Wow, that's crazy.
Yeah.
How long were they in the house before they learned this?
So this is an office, like a commercial space,
business, yeah.
But a few years.
Oh wow.
Yeah.
And it just changed one day, and they're like, "Now you need it."
Yep.
Whoa.
Yeah.
Oh, that's
and it
interesting.
also can change too. So like, as mortgages get sold off, things can change. Different banks can have different requirements.
Yep.
So these things are always in flux. But to the point of saying, having that in place for a purchase, in my eyes, it almost should be mandatory, because imagine coming up with that scenario where all of a sudden you would never have thought about flood insurance, but it's right there.
Well, here's what's interesting about that perspective, because I agree. It's like, it's a pretty important thing, but with every home and every offer, these are terms. So we're coming out of a market. We're still in it in some areas.
Yeah.
Maple Glen. Where there is still more than one interested buyer on a house for sale. So if there's a home that's listed, inventory is low, more than one buyer is interested in buying this thing, that's called a multi-bid scenario. And in most multi-bid scenarios, whether there's 2 people interested or 10 people interested, that's when people start what I like to call waiving their rights. Okay, I'm competing against another buyer. Okay, here's what I'm going to do. I'm going to pay more money than I initially offered. So hopefully that's more money than them, but I'm going to waive my rights. I'm going to waive the right to inspect the home, to learn about termites, radon, and insurance. Also, one thing that people have been waiving are their appraisal and mortgage financing rights. I know I need a mortgage on the house, but if there's a problem, I'm going to take that problem on myself. So in a seller-driven market, that's when these things kind of go by the wayside. The last couple years were very seller-driven in most areas of the U.S., if not all. It's starting to slow down now. It's starting to even out. There are markets, California is one included, where it's turning more into a buyer market. And the reason being, there are more homes for sale than there are buyers. So if I take a buyer out in California and there's 5 homes on the market and they've all been sitting on the market for 3 months, we can take our time. We can look at all 5, we can pick the one we want, and we have leverage on the terms of our contract, price, as well as due diligence inspections. So I find this like really interesting from a real estate standpoint, because in California, it seems like it's new.
Well, which is surprising to me, because you would have thought that with the earthquake and the fires and everything else that they have going on out there, that it would be even more of an issue from time to time. I mean, imagine buying a house like $5 million in California, and your only option is the FAIR plan, where you have a stripped down policy, like
of like a multi-million-dollar, probably luxury home.
Yeah. I mean, and the statistic that I sourced beforehand was, in the last 5 years, the percentage of policies that have gone to the FAIR plan have increased by 276%.
Wow. Jeez.
So 5 years ago, it was probably nothing. It was only problematic people that had a lot of claims, or their property was just like falling down, or those really extreme problematic homes, where now it's like really becoming typical and standard.
Yeah,
for some of these homes.
Unfortunately, I feel like I hear about a new like major California wildfire like once a year or once every 2 years now, of something that ends up causing a lot of damage. Like, you know, people lose their homes, their businesses, their livelihood. It's crazy. And it's funny for me, I never even heard of a fair plan. Maybe it's because Pennsylvania isn't prone to as much of that.
Yeah.
But it doesn't mean that Pennsylvania doesn't have people under their fair plan. I mean, water is an issue in our state because there's so many rivers, creeks, streams, lakes,
Creeks.
you know, you go down the South Jersey shore, it's a little over an hour away from Philadelphia. You got the Atlantic Ocean. So it's like you got people on the bay, you got people on the beachfront. Like these are all risks.
Yeah. And like I said to you before too, is automobile insurance used to be the same. You know, if you, because you always need that backstop and the state is always there to provide it. Years ago, we used to take applications if someone had a lot of accidents or like, you know, some sort of violations that precluded them from getting coverage with a standard carrier. They could go to this, you know, fair plan for auto insurance. So it kind of ran the same way.
So that would be more for auto would be like if they've had a lot of liability, like issues in the past, claims, like you said, accidents, things like that.
And no insurance company really doesn't fit into their eligibility for a standard carrier.
All right. So let's talk about it in Pennsylvania a little bit. Now, again, I'm also going to have Dill 1996 scrolling style. Neither Tim nor Sean P. Mooney are attorneys.
Correct.
Period. End quote.
Watermark that.
Right.
The law offices of Sean P.
The law offices of Sean P. and Timmy G.
Yeah.
That's what we're talking about right now. It's made up. So in Pennsylvania, there is a contract contingency already, as I stated. I guess off the top of my head, how many are there for like due diligence inspections? There's probably like around 10 or so, 12 different options you can choose.
Yeah.
You know, home, termite, lead paint, property insurance,
radon,
survey, exactly. So in Pennsylvania, it's called the property and flood insurance, you know, option.
Yep.
During your due diligence. The key words, and again, I am not an attorney, neither is Sean P. Although he does look like an attorney, doesn't he?
I'll play attorney.
He's rocking a long sleeve T-shirt and an Obey Worldwide hat.
For this episode.
I mean, folks, how can he not be an attorney? Let's be serious.
Do I look more lawyerly?
You do actually, yeah. So let's talk about the key words here. Buyer may determine insurability.
Yep.
So remember, we were talking about this before this episode started, and I'd said, I want to be careful about, which we are.
Well, it's pretty simple in my eyes.
Yes.
In my estimation, it's very simple in that you're giving the buyer, like all the power is beholden
The leverage
by the buyer. It's not
the insurance
company. It's not any other entity that would decide it. It is to the buyer.
Exactly. So ladies and gents, real estate agents in Pennsylvania, if you have not noticed this part of due diligence inspections, read it, get an attorney's opinion, get your insurance rep's opinion.
Well, the lady on the video also said that start with your insurance company, because just like in California, as all of these different markets across the country are starting to tighten up, are starting to get more critical on the risks that they have, implementing a lot more of this technology that allows them to get more information on these properties. Start with the insurance, because like she said, we're seeing things that an old roof, they'll reject coverage.
They said like the dead landscaping, like things that can catch fire easily.
Overhanging trees. Over the house. We're seeing that in Pennsylvania. Prior claims. We've had issues where prior claims, zero paid claims, are not allowing people to get coverage on a new home. We've been through this a few times. I even mentioned it. The one
I remember.
where Steve was buying the place in Florida, and he had a zero claim, and some carriers were like, "We don't want you." So start with your when you're in the buying process. Start with your insurance company to get the estimate and check eligibility for the home, because every week, every month, All of these carriers are changing what they want and what they don't want in terms of homeowners insurance.
All right, I got a really good name for this because you saying all that, you just gave me the inspiration to create a name.
Let's go.
Agents, what you should do, you should get an insurance pre-approval or an insurance pre-qual. So what happens when a buyer comes to me and says, hey, I want to start looking at real estate, whether I know you or not, it doesn't matter. Some of the first words out of my mouth are, have you spoken to a mortgage company about getting pre-approved?
Yeah.
Pre-approval is what I would prefer. Pre-approval means credit, application, supporting docs, and they say, you look great, Billy, Susie, Natalie, Sven, you look great. You're good to go. So telling my clients to get a pre-approval or a pre-qual, which is a little bit more of a basic letter, is good for the buyer. So the buyer can understand what they can afford, what they can afford, and what they can barely afford before they look at anything. Because what happens is if you look at homes before you're approved for your mortgage, what happens? You tend to fall in love with something before you even talk about, how am I going to pay for this thing? Or if you make a lot of money, but you have hard to prove income, you're like, I can pay for this, no problem. It's like, yeah, but to the bank, you might not.
Yeah.
You should be getting an insurance pre-qual through someone like Sean, no bias.
No.
Maybe a little bias. Speak to your insurance rep when they're looking at homes. So, hey, we're going to look at 123 Main Street, 124 Main Street, and 125 Main Street on Saturday. They're all kind of in an area where there might be tannery run, a creek or a river or an ocean or whatever. And you're just like, send those addresses to either your insurance contact or my insurance contact that I'm recommending, so that we could just get a sense, are any of these in a flood zone? Are any of these high prone to like things that we don't understand?
Yeah.
And then someone can get a price. Because what happens is the agent does a buyer's estimate of costs when someone's usually like getting in the market, like looking at homes, understanding what things cost. But I don't know insurance. I haven't talked to you yet. So I take a guess, $200 a month, $300 a month. You know, I shoot from the hip a lot of times, unless I know from either the MLS or I know from my own personal knowledge that that's by a body of water. Then I'll say, you know what, I think you should probably get some, like a flood insurance quote. But after watching this video and talking about it with you and understanding how insurance works in every state, is that you're better off to know more before you go out and start trying to buy homes or even a car than if you didn't know. Because if you know, you're going to understand the cost more, you're going to understand the risk more, you're just going to have more knowledge.
Yeah. And two things there is, number one, make sure that a lot of times these insurance companies, you'll call, say, hey, can I get a quote? Hey, spit out a quote. They don't even look at the home.
Right.
And hey, yeah, here's your quote, right?
How much is the house?
Well, no, not even that. But so they get the quote, right? And then they follow up 2 weeks later. Hey, we got approval on this. We're going to move forward, blah, blah, blah. Okay, great. Then they put the address in to start quoting it to get it into an application. Status means a little bit more. There's a little bit more scrutiny once it gets into the application stage. And then they get a reject.
So if if a buyer talks to an insurance company, let's say they don't know, without giving an address, they're really not getting
No.
much.
You can give the address.
Okay.
Say, hey, this is the house we're looking at.
Okay.
But
they don't run it.
Right.
I see. Okay.
They just put in their computer, they put in the address and get the quote.
But they don't analyze it.
Right.
Ooh, good tip.
Yeah.
That's a pro tip right there.
So what happens is, let's say you're an exclusive insurance agent. You only represent one company, because we have this happen all the time. Hey, we're buying this house. I went to my agent, got through the process, went to finalize things, and ineligible.
Wow.
Now you have to start that process all over again.
Crazy.
So number one tip would probably be, if you're working with an exclusive agent, make sure that it's eligible, and ask that question. Say, hey, listen, thanks for the quote.
Yeah.
Any issues with eligibility based on roof, electric, different things that company would write or rate against. And number two, it may be easier to work unbiased, to work with a broker, because
They have more options.
If it doesn't fit with this, we don't have to start from scratch. We already have your information. When I'm preparing applications for you on your behalf, we're already preparing it for 10 different companies.
Wow.
So it's a little bit better in terms of the process that way.
All right. So pro tip number 1 is everything Sean just told you. Pro tip number 2 is from me for all the agents out there that if you're not checking this box because you're worried about it, you don't understand it, talk to an attorney.
Yeah.
Get a second opinion on the language so that you understand it better. We have our own interpretation, but the law offices of Sean P. and Timmy G is not real. So go ahead and get a real attorney opinion. I mean, it is real now that the Obey Worldwide hat came off.
That's it. Those are our tips,
Yep.
which will be very helpful if you're buying, if you're selling, even if you're selling. I mean, you want to be aware of, hey, did anything change with this? Did anything change with the mapping? Is there any requirement that's going to force the new buyer into a scenario where they'd have to, because that impacts the pricing.
Yep. And this is good for your buyer clients too, real estate agents, because it's going to allow your buyer to really get a true understanding, just like a pre-approval would for a mortgage, of what the cost might be of 123 Main Street.
And listen, at the end of the day, we've always said it, more information is always helpful. So the more information you can gather about the property in the sale transaction, it's going to be helpful on both sides.
Awesome. All right, go ahead and shut us down.
Reach us on the email, kids, bricksandrisk@gmail.com. If you want to reach out to the show, let us know what's going on, what you like, what you don't like. Apple Podcast, Amazon, Spotify, all of the podcast outlets on socials. Get us there as well. Instagram, Facebook. Great LinkedIn. We're really...
LinkedIn is over 600 members now.
Yeah.
And I will say, I'm going to do a little self-bragging.
Go ahead. Do it.
We just crossed 100,000 views on YouTube. Some people who make a lot of video content or are very skilled.
I got 100 grand yesterday.
I got 100 grand. Yeah, I got 100 grand yesterday. We're like 100,000 people have seen Bricks and Risk.
Yeah, pretty cool.
Either in short form or long form.
Which I think is funny
humbling.
too, because we went over 100, then it was like 115. It jumped like...
It's moving a little bit quicker than it ever has, which has been awesome.
Get on YouTube and subscribe today.
Subscribe today. Well, that's all we have for this one, folks. Thank you for tuning in again to another episode of Bricks and Risk. See you next week. Thank you for joining us on another episode of Bricks and Risk. Our goal is that you walk away with 1 or 2 valuable nuggets, and we greatly appreciate you sharing your time with us today. You can find all BNR episodes on Spotify, Apple Music, YouTube, and anywhere else you get your podcast content. Until next time, keep learning and keep growing.